limits. I'd like to start my questioning of Arminio about Brazil, of course. It's good to bring the South into this discussion, which has mainly been North-North so far. And I'd like to do it, though, with a little history that relates to your service. So, as you know, Arminio became governor of the Central Bank of Brazil in 1999. He came from working with George Soros. And it was not that great a period at that point, because emerging markets were just reeling off crises. And what I liked about Arminio, he instantly talked about policy and really what Brazil needed to do. And there was this phrase which we keep repeating around here. It was time to turn macro chaos into some decent macro controls, monetary and fiscal, but at the same time turn these micro controls, government controls, into more micro chaos. In a sense, that's the key, I think, to so much policy changes. When they go in that direction, it's good. When they go away, it's bad. But you brought that very refreshing feeling. You got some critics. In fact, before President Lula was president, he was quite a critic. But then what I thought was amazing, and this is partly based on our association when I was in the Treasury, got together a program, the IMF, to insulate Brazil from this mess that was coming from Argentina, very successfully, for which there was a headline in Newsweek, "The Nerd Who Saved Brazil." I don't mind the word nerd. It's a great headline, "The Nerd Who Saved Brazil," and then went on to actually set up what would ever happen in the election in 2002, which was Jose Serra versus Lula. And what I think of what Arminio did, along with the finance minister, Pedro Millan, was set up a sense that the two candidates at that point, the two candidates for the presidency, would kind of buy into the basic structure of reform that were part of that agreement, but more general. And then the concept idea, well, whoever would get elected, they'd be somewhat committed to that. Well, Lula got elected, and of course, many people worried about what he would do. But it turns out he early on said, hey, I'm going to basically, I'd say, stick with this. And I remember while I was working in Washington, when Lula came up after the election and visited with President Bush in the Oval Office, I was there, and he basically sort of reiterated this really surprising set of policies that he wanted to pursue. Not perfect, but the kind of things that I mentioned Arminio wanted to have. And I remember this very well. President Bush says, hey, that sounds like good Republican policy. Got a lot of laughs in the room, polite laughs, I think, from Lula. But it was nice. And I think, just to get on with my question, that's roughly speaking what happened for a while with Lula. And Brazil actually continued the performance, less foreign borrowing, less indexing, more focus on inflation targeting in the central bank that Arminio began. And it was good. Times were good. And it was a thing I certainly talked a lot about. But Arminio, it's not so good right now. Things in Brazil are sort of turning away from what I thought was a good story. So I'd like to begin by asking you about that.
Okay. Just before I say anything, I'm really delighted to be here. When you contacted me, it was an instant yes. And I called my wife this morning saying, pack up and move here. I'm not leaving. I did that. Now, the whole those 4 years were exciting. There's a lot going on, and yes, I think things look good after the initial kind of macro sort of stabilization effort. The Lula transition was crucial for us. We all thought in Brazil back then that someday someone like Lula would win, and it would be a catastrophe, a disaster for us. And it wasn't any kind of bias or anything. Brazil is a very unequal country, so it's natural and desirable that you have, a strong labor party. All of that was fine. It's more that the party we had a crazy platform, and it was in writing, and anybody could read it, renegotiating the government debt and whatnot, none of it necessary, closing the economy, etc. And for a while, there was a real deep fear, and once he took the lead, there was a real panic. And it was a situation where we really, frankly, couldn't do much. People would look at us and say, fine, you guys are trying to do this sort of more conventional stuff. We weren't reinventing the wheel. And, but, come January 1st, you're not going to be around. So I'm taking my money out. And so it was that. And so it's to Lula's eternal credit that he pretty much threw away his party program, picked up some good people to run the economy for him, including quite a few that were with us. And he deserves a lot of credit. He also was extremely lucky in it that he took office right in the very beginning, almost the exact bottom of the commodity cycle and the business cycle, and he surfed a fantastic wave all the way, of course, to the crash. He managed the crash very well, and you may recall the commodity boom continued past 08, and Brazil went all the way up. It was for the many economists in the room, it was a 35% gain in the terms of trade. It's huge, huge. And the trouble is, sort of halfway into it, he kind of gave up on these policies that are kind of boring, the kind of thing that that John and I like, this sort of transparent. It's a view that, on things macro, if you can stay out of trouble and be reasonably predictable is a good thing, and kind of that's what we try to do. And he changed, but he also changed the micro side of things, the regulatory world, the tax system, the slow but clear movement towards turning Brazil into a much more open economy. That was reversed. And having the very large government banks take the lead in the growth of credit in Brazil with predictably complicated results, etc. And it took a while for that to have an impact because it was boom time. But once he finished his term, passed the baton to our current president, two things happened that hurt us pretty badly. One, the most important one, was she kind of doubled the bet on this more interventionist model, full of distortions, bad incentives, and so on. So micro problems that have had, I can flash forward to a quick conclusion here, major impact on growth and productivity in particular. And she also, to be fair, also got hurt by the terms of trade turning around. As you know, over the last few years we've seen, and recently in particular, iron ore go down 60% from the highs, soybeans down a third, and oil now, Brazil has been finding quite a bit of oil down, whatever, 40, 50%, doesn't help either. And she, instead of adjusting, trying to go back, sort of doubled the bet, and so macro discipline went out the window. She started resorting to kind of accounting tricks. So not only were the numbers bad, we started losing faith in the numbers. They've kept inflation very high, around 6%, despite the formal target of 4.5, which in itself is also, for my taste, also too high. And double the bet on the micro side. So there are dozens, if not hundreds, of strange tax breaks, subsidies, loan subsidies, protectionist measures of all sorts that are really taking us away from kind of the winning side of the planet. We're in bad company. There are some extreme cases in our region, such as Venezuela, Argentina, Bolivia, Ecuador, We know Argentina well. John and I suffered through that. It wasn't easy. That's sort of where we are. So we're back in a way to sort of macro, I wouldn't say chaos, but we have 8% inflation and micro frustration. We've had very little investment. So Brazil, for a developing country, invests 17, 18% of GDP. It should be investing a lot more. It doesn't invest well. During Dilma's first term, pretty much all the growth in credit is in the balance sheets of these government banks, etc. Now, so all of that is pretty bad. And then more recently, it got worse. We started to see problems on the energy front. Largely, the proximate cause is a big drought. But the deeper cause is the fact that she pretty much ruined this sector, and there's no predictability. The rules are not very good. There hasn't been enough investment. So we were very vulnerable to this kind of Murphy's Law. She pretty much, in my opinion, ruined the oil sector as well with hugely protectionist rules, domestic content. Petrobras has to own 30% of every project, so all the American companies are out. Some hang out in this part of the world. You can talk to them. They'll probably tell you. And then, last but not least, this massive corruption scandal, because all these distortions that I mentioned are all kind of a product of rent-seeking, if you want to be polite, but it's really all kinds of nasty things are now popping up, and this is being investigated. Fortunately, that's the good part. We're going into a recession. With the terms of trade and the productivity problems, it spills over all over the place. We're running a large current account deficit, and I think unfortunately it's looking pretty bad at this point. And there are some signs. I'll finish with a couple more positive things. She did bring in a good finance minister who would have been on our team. Full disclosure, I was the main advisor to the candidate from the opposition candidate who almost won, and I would have been kind of coordinating this area of government. And he certainly would have been with us. He's good, but he's isolated. And even though his agenda, if he could do things on his own, would have been a good one. He's suffering a lot. He's under a lot of pressure. So I'm actually quite negative. On the positive side, we have the following: Brazil is an open society, because you hear, for instance, about what's going on in China with Xi Jinping's sort of anti-corruption drive, and you hear a lot about things going on in Russia of similar nature. In Brazil, they're out in the open, and that, I think, over the medium term is a big plus. We have a free press, not thanks to the Workers' Party. They've tried at least twice to introduce a law, a new bill, that would give them some control over the press, but they've so far failed. And the press is doing a great job. The police doing all the investigations is also doing well, and so is the judiciary. So I have hope that this being, to use a sort of Popperian term, this open society will digest this very well. But I am not sure. I can't rule out, and I say this with sadness coming out of my mouth, and this is my last comment, that the period of President Cardoso that kind of leaked into Lula's first term, I can't rule out that having been just an accident. And I'm not... to be seen, to be continued.
So very much your answer says that the policy not only makes a difference in principle, it's made a difference. You sort of see kind of what worked, what didn't work. You have the potential for a finance minister who also knows that right now, Joaquin Levy, your good friend. Is that enough for people to pay attention to? I think people do change, even within the same government, within the same party. It's possible to say, hey, this is not working. And what I read about is they're trying to do certain things, like this, it's austerity, it's called. I'm not sure if it is or not, but they're doing something. So what's the hope there for an adjustment.
Yeah, there was a massive deterioration in the budget deficit during the election year. Surprise, surprise. And a lot of it was done in sneaky fashion, as I mentioned. So he's trying to undo that. Our budget is somewhat rigid. There are a lot of earmarked expenditures and the like. And so he's doing it in a way that is more painful than it would have to be, because you pretty much do across-the-board cuts and so on, and there's no attempt at managing things better and opening up the whole budget for discussion, a more rational discussion that I believe will have to get done. Just to give you an idea, over the last 20 years, the ratio of government expenditures to GDP in Brazil went up 10 points. So we have a trend, kind of driven by a very generous constitution, for that to keep on growing. And it's now approaching, it's probably like 37, 38% of GDP. For a middle-income country, is very high. So all of that is out of bounds, and that can't be discussed. And so, you know, I think he went in against my advice, I might add. Is there any press here by any chance? Okay. Because I think it would have been better if they had gone on with their experiment all the way to the end. But so, you know, he might help them muddle through. I don't know. I don't expect great things as of now.
So, you just came here from Moscow and from Frankfurt, I guess, starting in Rio, I'm not sure, maybe you're going back, but, or maybe you're going to live here, that'd be fine. But in a way, the BRICS, you know, maybe there's the one of them is doing well, India, and hopefully we'll do even better, we don't know. But is there some commonality here, or do you think it's all special case? Obviously, Russia's a little different, China's different, but is there some commonality of getting off track here that's part of the issue?
People talk about the so-called middle-income trap, and I think in the end it's probably about the politics and the political economy of policy making and so on. And I think they all have that in common. But in many ways they're profoundly different. I mean, Russia, of course, coming from the USSR, has its own issues, and now is having to deal with, I think in their case, a real perfect storm, or part of it's self-driven, but between oil and everything surrounding the Ukraine, I think they are going to respond well on the macro side.
Russia?
Russia. But they have that background. There's some, I guess there must be some similarities with China that also, of course, is going through the most spectacular regime change ever. And hopefully both can continue to move on. But you know, when you go there, you see kind of go down at the ground level. I was surprised. I hadn't been to Moscow in a while. It doesn't look so bad. It doesn't feel so bad. Even though they're facing this very, very tough uphill battle. I think they're going to tough it out. But you know, who knows if oil goes down to 40, whatever. And
right. So
the other, you know, China. I'm very much with Larry in it. That I think it's highly likely to slow down, even if they don't run into a more serious problem. That, you know, it's hard to predict exactly what it'll be. And so Russia, Brazil, India. India is so, you know, India is different. It's really poor. I think people, they tend to think of India as being where Brazil and Russia and China are. But India is a really different development challenge, in my opinion. And I'm very encouraged by the new Prime Minister and by our colleague Raghu Rajan, who I think the world of. And you know, I'm kind of positive on what they're doing.
One of the things you mentioned, you were chair of the Brazilian Stock Exchange and had a chance to see what was going on in Russia in that respect. And I mean, that's sort of a little more on the micro side.
Yeah.
And could you say anything about that comparison?
I visited the stock exchange. They're also listed companies, so I went over there just curious to see. I know the sector well, having chaired our own, and I was very, very impressed with what they're doing. What I think is lacking in both Russia and China, and we have had in Brazil, is a corporate governance revolution. And it's been phenomenal. I think people realized in Brazil, business people, that this relationship with shareholders is not a zero-sum game. But it was that way in Brazil. And of course, as a result, the capital markets really went nowhere. So you had these companies trading at cheap multiples, but not really delivering. In many ways, you have that in China. You got a lot of these companies, the 8 shares.
Right.
It's cheap multiples, but you look at your total return over 15, 10 years, it's really not that impressive, despite all the growth. But in Brazil, we've had that, and it worked beautifully. And so I've asked, and in China, I'm on the advisory board of the Chinese SEC, and I've suggested we meet once a year, so it's kind of slow moving. But I've asked, why not? And I think then there are deeper political issues and how they want to run this. But for us, it's been spectacular. So that's one thing. I hope someday the private sector will contaminate, the healthy private sector. I say Brazil will have done well when business people stop going to Brasilia. I think right now there are way too many people in business who spend a lot more time in Brasilia than they should. It should be about 0 for my taste, and they seem to spend way too much time, and evidently, from what we now hear, money in Brazil.
The planes from San Francisco and San Jose to Washington are filled all the time these days. So I think it's the same. You definitely see a change in the last few years. So speaking of that, just general change, I've been quite optimistic about development, the world economy, so much progress we can make, and I still am. But when you hear these fallbacks, it makes you wonder whether the view of what really we should be doing is changing. Thinking maybe more intervention works, or you think about China has done beautifully because of the policy, right? They changed their policy to encourage markets and some economic freedom, and that message, we're in danger of losing it, but I hope we don't. But you travel the world, you see this. And you're an economist. You know what's good policy.
I don't think that part is so threatened in either China or Brazil. Russia, I can't claim to be any expert just because I just spent 2 days there. So discount whatever I say about Russia much more than about Brazil and even China, because I go there much more and have been going. But I do believe in convergence. I think to me, there's no question that there is a role for government in providing, I think, at trying to deliver equality of opportunity in these countries. A decent public education and health. And for instance, in Brazil, we should be seeing a massive boom in infrastructure investing, and it isn't happening, and we need better rules that are more market friendly, but good rules, and so we don't have that. And in fact, I might be stretching things a bit, but I don't know of any development case where there was not the presence of a good state. It can be on the large side, like in Scandinavia, on the small side, like here for most of the history of the U.S., but a good state, a properly functioning
rule of law,
etc., equality before the law, and I think that's still a question in all of these countries, in all of them, and so we'll see which way it goes.
Let's talk a little bit about monetary policy. So you ran the central bank, you really know it inside out. There's lots of concerns about spillovers of the unusual, unconventional policy. In fact, some of your successors complained a lot about it, including the president, I guess. What do you think? Is there a problem with all this kind of unusual, unconventional policy that inherently causes spillovers, or is it just people making excuses for their own poor policies? So what's your sense of the sort of policy contagion issue?
Well, there were some things I thought we knew, or I knew anyway, about that. One is that central banks can control inflation. I thought that was a done deal. Particularly moving inflation up wouldn't be so hard. I thought money also had something to do with it over the medium to long term. And now we're going through a phase where that is not there. And moreover, everything, when we quote, so this costs $1. What is $1? And it's something the government issues or prints. Then I thought floating exchange rates were a good thing. And with floating exchange rates, countries would be allowed to run their own monetary policy. And moreover, countries would be able to manage sort of shocks, international shocks and the wise. And I also thought that even though maybe money was becoming somewhat more mysterious than in the past, that with inflation targeting, we kind of get away with it. So you have central banks sort of trying to keep inflation low and pretty stable, over the short, medium term, depending on where you are. And indeed, there has been this convergence in the more advanced economies, the low inflation. Now they were dealing with the threat of deflation, as I mentioned. And I also thought, like you, in many ways, that this could be a reasonable international monetary non-system, if you will. And you call it a
Nice.
Standing.
Nearly an internationally cooperative equilibrium.
So,
actually, if I just say the nice term, it's like a nice system, of course, but the word nice comes from one of your former central bankers, Mervyn King, who called the Great Moderation period, this remarkable period in the 80s and 90s until really the last 10 years. He called it nice for a non-inflationary, consistently expansionary. So I like nice. Nice was nice, but I said we need another nice. Nice for international, so it's nice squared. So I want to get back to nice squared.
Non-inflationary, constantly exasperating.
There you go. That's what it's like. Yeah.
But now, now you have the beginnings of a sort of beggar thy neighbor type approach the U.S. started. I think, by the way, I want to talk a little bit about QE and guidance and all that, but briefly. I for sure, like Larry also, again, I think the Fed did what it had to do. It's more recently that I have my doubts. So I think on a risk management basis, why is the Fed at this stage in the cycle still pedal to the metal? I think is an important question. And I guess, we'll find out over the next, 3 to 6 months or years or whatever. But on the unconventional stuff, I think we've seen declining or diminishing returns. I see it all as sort of manipulating asset prices, and it scares me a little bit. Because you're really trying to affect the yield curve and asset prices. And I think governments in general don't have a very good history of doing this kind of thing, at least not for too long. And they usually tend to kind of over-welcome their stay in any case. Intervention is a classic on foreign exchange markets. And we have not seen the full story. It's good going in, but going out we don't know.
Well, we saw some in the taper tantrum period. We saw some.
Yeah. So I remember this story of my kids, when we were living in the States, they were listening to something on the radio. They said, "Dad, come listen to this." And there was some comedian saying, "Oh, so you like going to parties with metal detectors?" And I said, "Yeah, sure. It feels nice on the inside. But what about those folks on the outside? They know you don't have a gun." So we just don't know. And guidance, I think, is nuts. Really, I really dislike guidance. I don't like any policy where central banks are going to be 50-50. And you see the zigzagging. And I'm sorry I don't have any charts, but I'll ask you to use your imagination here real briefly. I also think the central banks, the Fed inclusive, is trying to smooth volatility, repress really volatility.
Yeah.
In a way that's somewhat artificial, and I think that also helps generate these kind of carry trades and this search for yield, thinking that there really isn't that much risk. And if you look at the vols for the last 20 years, they were very low during the Great Moderation. That became the Great Bubble, both for stocks, for bonds, and for currencies. And if you look at VIX, we're now back at the lows. But if you look at the vols for currencies and bonds, we're below the lows of the Great Moderation as we speak. And that, to me, is kind of strange. I look around the world, it doesn't feel right. So anyway, I find that I like a sort of an approach to monetary policy that is, of course, very alert to problems and that did well in avoiding another depression. That was clearly, in my view, a risk. But then more recently, I just don't know. Even factoring in, low growth, demographics, all that stuff.
One of the things that I notice, different kinds of policies, and you doing monetary, and you may have done a lot more. The election had gone different ways. Seems to be related. If one gets manipulative for monetary policy, interventionist, it tends to be a contagion across different kinds of policies in the country, if you like. So a very interventionist, if you like, manipulative is the word you use, monetary policy can begin to make other policies the same. Do you sense that from your experience?
I do sense that, and I also worry about the relationship with fiscal policy and other policies in general. And I don't want to underestimate the challenges out there, but this is an issue, and who knows where it's going to go. I think in the end, many people worry about central bank independence and so on. I worry about financial regulation as much as I worry about monetary policy, and moreover, I worry about the interaction between the two. I think we're seeing monetary policy that tends to be somewhat asymmetric. All of this is somewhat asymmetric, almost by definition. And just think, for instance, on QE, if you do the reverse QE, which wouldn't make sense because you're not against a zero bound, but just as an exercise, think about it, the Fed trying to steepen the yield curve through its speeches, but not through actions. So I think we have to wait and see. It'll be a while before we know we can have a good opinion about all this.
Your characterization of forward guidance is terrible, basically, what the word you used. Conveys, I think, the problem of central banks trying to say what they're doing in the future, which is not always what they're going to do. So it conveys a credibility, consistency problem, especially if it changes a lot. On the other hand, if you think about how you implemented inflation targeting, it's pretty clear what you would do. To your policy to maintain that inflation target, you didn't have to go out and say what you're going to do next week. But there was a sense of people understanding what was going on. So you had a forward guidance without talking about it a lot. Seems to me that's the way you should think about this.
Well, it's more implicit. We'll never know, but I wonder if the Fed had just said, I'm going to use all the tools I have to hit 2%, whether it would have been that different, and whether it would have been that complicated to exit. I wonder. I also wonder on the regulatory side. I didn't finish I interrupted myself and dropped that, but I'll recover from that lapse. I can't believe a 2,000-page bill is any good.
We got a few of those. Yeah.
There ought to be a better way to do this. But I'm not sure what. But it probably has to do with governance and making people more responsible, mimicking perhaps some aspects of partnerships where people have, their thing on the line and all that.
So your connection between regulatory policy and monetary policy raises this idea of so-called macroprudential actions of the central bank, where the sense is you can't use interest rates, or your interest rates are influenced by the Fed, say. And so the banks rely on these other tools. Loan-to-value ratios change, capital ratios change. Seems to me that you're seeing a lot more of that, not necessarily because it has to be done. It's the right thing to do, but they're kind of being forced into it by the very unusual policies again. So I actually worry about macroprudential use in a very highly interventionist, fine-tuning way. Get the levels right seems correct to me, but what do you think?
We're now watching this, and we have been for a while, but in some countries. In China, this has been the way forever. They manage things through just pick up the phone and say, slow down the lending. But we're also seeing in Turkey, I think, an interesting experiment where they are certain they have a new way to run monetary policy by kind of interfering with credit, tightening credit. So it makes you, particularly when you're tightening, it's politically easier because everybody hates the banks, and you're going to squeeze the banks. And so if you're somewhat of a populist, that's kind of the thing to do. You don't raise rates. You just introduce credit controls. And I wonder, think about this if you're doing teaching basic macro, or what used to be called money and banking, you had the money multiplier and have reserve requirements. And so we've always known that you could hike rates, but could also increase reserve requirements and so on and so forth. So I think of this as the modern version of reserve requirements. And it makes me wonder why in the past both academics and policymakers thought that fooling around with the reserve requirement a lot didn't make much sense. And I don't know why, and now I think it's the modern version with capital markets. You don't have reserve requirements, but you have haircuts, loan-to-value ratios, etc. But it's kind of like reserve requirements. And I am all in favor of watching what's going on in the credit markets as a tool of sort of for understanding what it is that's going on, etc., and trying to be preventive about it, like in medicine, I suppose. But then beyond that, I don't know. I probably like it a little better than you, I suspect, but not a lot.
No, actually, I think it's. It used to be before we had interest rates as a explicit, obvious target that central banks would talk about money growth. Money growth not much different than credit growth.
Yeah.
And Milton Friedman argued for just keep money growth constant or keep it relatively steady. So that's not much different. I think that's what Uruguay is thinking about that. I think that's what you're hearing in Turkey.
Yeah.
It does get mixed up with the credit controls and those kinds of interventions. But maybe we should throw it open. I actually want one question before we throw it open is, SIEPR policy research is the PR part. And I always think, you're a person who studied economics, you applied it in the private sector very successfully, you still do. You applied it in the public sector very successfully. That connection between kind of basic research or even applied research and these policies seem to me so important. So you have a sense maybe about what we should be doing here to help that, or what are the kind of things that people like us should be working on to be most helpful to you guys?
Sounds like you're doing pretty well by looking at this room.
Gets a good diplomatic answer.
No, I do. I keep on doing more of the same. I think this is a two-way street. I think it's very healthy for academics to be in touch with, business people,
Right.
know what they're doing, and vice versa. So I think it goes very well. And it's this is a bit of a surprise. I had no idea what.
You just want research on whether you should short the long-term bond.
No.
So
I was thinking about that.
Yeah.
Larry.
So actually, let me stop and see if there's other questions.
Larry left
here.
out the JGBs and Boons. I was thinking about those.
Okay. So questions? Right here. In this table right in front of me. Right here. Where we go?
Thanks, Arminio. Mike White. We have Sky Brazil, so we know a little bit about Brazil. I'm curious, having been involved in politics and economics, it strikes me that one of the challenges we're seeing all around the world, even in this country, is conventional economics and politics are having a hard time together. And it is just so easy to play populist, promised intervention, and go play your games. And it's true particularly in Latin America. I'm curious, when you look at kind of having run a campaign and the difficulty, I mean, you look at the stuff you talk about, you go, how did this person get elected? And there she is. Clearly, there are underlying challenges with income inequality and everything else. What lessons would you take from it, and how do you think about trying to do a better job of marketing sound economics in a political vein, given that seems to be a huge challenge right now, and I think it's a challenge in this country with the progressives.
I think where you're putting your finger on my scars a little bit, and I think that's the challenge. It's very unintuitive for people to believe that a system where there's less and more systematic, and when there is more systematic intervention, is better. It's nearly impossible for them to believe, but I believe it is true in our case in Brazil that it is also more progressive. We just went through this during the campaign. We have in Brazil quite a few important social programs that address the issue of extreme poverty, and we still have a large chunk of the population that is either in that bracket or just above it, so it doesn't mean that much if you're $10 a month above a very low bar. And it was very hard for us to communicate. I wasn't directly on the campaign, but I was very exposed, and I would reply, for instance, through the local Wall Street Journal, and I'm sure they were laughing at me. Say, "Oh, there's Fraga again. He's preaching to the convert." And I tend to believe that extreme populism it cannot be defeated. You have to wait for it to crash. And then once it does, hopefully you can kind of recover from there. But it doesn't always happen. Look at Venezuela right now. So that is a massive challenge. And I don't know. I'm not a professional communicator and so on. And I was always more, I would go to Congress frequently, do that part. But then when it comes to a national vote, it's a different ballgame. There's a ton of money involved, different means of communications, and then in our case, there was just, a surreal campaign with people just saying a whole bunch of things that were just not true.
I think the involvement of economists in campaigns is a separate, very interesting question. People write books about economists in government and memoirs, but in a way, the participation in a campaign is more interesting and ultimately more powerful because decisions get made about what the platform and as you say, the candidate at least is articulated in this in a way to appeal to a broad group of people. So I think you should write about that, even though you weren't exactly on the winning side.
Well,
yeah. Many other questions? Yeah, right here at this table. Good.
What short-term and long-term economic and social effects do you think having the Olympics will be? There'll be some short-term or any long-term benefits that you see, and throw in the World Cup too.
The Olympics are a city event, so it really affects Rio. Rio is a city in search has been in search of a new life ever since the capital moved to Brasilia, 50 years ago, 55 years ago. So I think it'll be positive for Rio. They're doing quite a bit of infrastructure. They claim, meaning the mayor and his office, they claim they're not going bust, which is also good. So it'll be positive. Now, it will put us on the TVs of people all over the world, and if we're happening now, it wouldn't be so good in a sense. We're doing very badly, this huge corruption scandal all over the place. I didn't mention it, there's a lot to say, but for instance, right now, the heads of the House and the Senate are both being investigated. That kind of thing. So, I don't know. We'll see. But it's probably okay. It's not a major thing for a big country like Brazil. It would have been a chance to show, our stuff. As of now, we probably are not in the mood to show much, but by next year, who knows? Unaffected. It's marginal, very marginal.
I mean, is there something, say, the U.S. could do in terms of communicating more with Latin America about what policies work? Or is there a sense in which, we talked about the negative aspects of policy contagion, but you think about some of the changes in the early 80s, they were global, and there was a sense in which those good changes had contagion. Is there, just one example, after you left, we set up this Group for Growth conversation between America and Brazil, and it was to emphasize, pro-growth kinds of policies. But what do you think about that? Is that something that could help here in terms of countries?
It could, but we have a government that, they're now in their fourth term, and their policy has been very much focused on South, or the so-called old third world. And I'm not sure what or how the U.S. can do it. I'd like to see the U.S. more engaged. That's
what I mean. Yeah.
Certainly vis-a-vis Brazil.
That's what I mean.
And then, maybe just being engaged would mean being in a position to deal with, or to make use of opportunities were they to pop up, like the trade. I like what's happening on the Pacific side of Latin America with Chile, Peru, Colombia, Mexico, Costa Rica, maybe a couple of the smaller ones, getting together, working on trade issues and so on. And I like Brazil to be part of that club at some point.
Absolutely.
Yeah.
So any other questions here? Is that one way in the back? Yeah. I see the hand, but
There's one there and one here.
there's one up here too.
And here.
Thank you. One quick question. Earlier in the day, we had some discussion in the session right before lunch about some of the difficulties of the Chinese economy. I'm curious how some of those difficulties might filter down or intersect with the challenges of the Brazilian economy.
Okay. China is probably now our number one export market, and there's a significant impact on us basically through our exports, through export prices. I have a feeling China has lost interest in Brazil a bit over the last 5-10 years, which is kind of sad in a way. I'm on the whole positive on China, but I do think they have issues, and there'll be bumps, and then with the politics they have, who knows? If you take a long-term horizon in China, with the political regime, with the environmental issues and so on, they also going to have a lot of work to do. But other than that, they're following the classic Asian model, very high savings, not that much focus on the more traditional kind of Anglo-Saxon approaches, at least not huge. Whereas we're not that virtuous. We don't save that much. Well, we work hard. I think it's not a lazy country, but it's not a high-saving country. I think we have to go more in the U.S. Way than the Asian way if we are to succeed. But China is so big that, it matters for everyone these days. I wish also the U.S. continues to do well and even better and strengthens itself and breaks away from this strange political situation we now have. Because we need a strong U.S. for China to grow well. I think they would respect the U.S. even more if the U.S. was really, say, fit. He said, fine, let's engage. I'm super fit. Whatever it is, I'm ready to engage with you. But for now, make sure you do well. And that I think would be great for Latin America as well, to have a U.S. that is in that position, even stronger. It's, of course, the greatest economy in the planet. My mother is American, so I'm very biased. Hope my Brazilian friends don't mind me, but I think the U.S. is so special. So we just needed to stay special and not slack off. It's my opinion.
So one more question. There's one up here? I guess not. Huh? Oh, right. I'm sorry, right here.
Yeah, my question is, you seem to correlate so much the current conditions in Brazil with the policies of the current administration. But are you out there twisting in the wind by yourself, or other people share your viewpoint on this correlation?
No, they for sure share. It was a very tight race, and most well-informed people voted against her.
Is that
Okay.
it? Is that right? Is that the answer?
Thank you.
Okay, thank you.
Thank you.
Thank you, John. Thank you.